Well, at ET Now, we spoke with Raamdeo Agrawal of Motilal Oswal to get in his big picture view, the long-term strategy on the market, the super growth drivers, and where he sees opportunity and value. Well, just to put into perspective, here's his general view long-term for the markets. He believes that in the next 10 years, here are some of the factors that we can expect. Sensex to hit a level of 2 lakh. He's talking about corporate profits rising about 15% CAGR over the next 10 years. He also expects that the growth will rebound in the country, so he's expecting India's GDP to grow at 12 to 13% CAGR. He also expects a trebling of the per capita GDP, and that's going to be about 10 times the discretionary opportunity is what it will be equal to. And he sees a 4 times opportunity in savings and investment. In fact, what his mantra is, according to him, what the government needs to do is aggressively divest PSUs, clear a lot of blockages for divestment, and focus on jobs and reviving growth. Now let's talk a little bit about what he said today. He believes that the macro scenario is extremely complex right now, and that real value is created by companies crucial for investing. In fact, Raamdeo Agrawal believes that deep value stocks are going to make more money in the next few years. In fact, he sees growth stocks outperforming value over the next 5 years or so. COVID, though, of course, has been a huge dampener and has destroyed demand across sectors. We've also seen a scenario of price inefficiency and scale, which has changed drastically in the markets, according to Raamdeo Agrawal. But the digital evolution, he believes, is aiding the inclusion of masses in the markets, and the dharma of cyclicals is likely to go up quickly and come down. In fact, Raamdeo believes that the nature of the cyclicals is to go up and come down quickly, and that the global markets are awash with super abundance of equity capital, and that is spurring the prices of risky assets, and that is spurring the outlook as well, the commodities super cycle. The abundance of capital is aiding the commodities super cycle, according to Raamdeo Agrawal. Now, in terms of individual sectors, he believes that the current commodity cycle is likely to last much longer. He expects that PSU Banks would be at a very early stage of a growth cycle going forward. He also believes the same for auto and real estate, and he believes that the growth is likely to emerge right now. Post-COVID recovery is going to be very strong and sustained, and he believes that India is just about starting a new consumption growth cycle, and digital companies have the scope for super growth, according to Raamdeo Agrawal. He sees a 15% CAGR on earnings over the next 10 years, which is likely to take the Sensex up to the 2 lakh mark, and expects that there will be super growth in mid as well as small cap companies, and a deep correction and a steep correction will be expected despite a Sensex movement up to the 2 lakh mark, according to Raamdeo Agrawal. Telecom, IT, private banks, life insurance, those are some of the bets that he's looking at. He opts for value migration and believes that the unlocked bets that one can look at is auto, durables, paints, as well as the industrial growth.